Yo, what's up, gang? It's your boy King GK. I'm back here with another beautiful video. And on this video, we're gonna talk about how you can use a simple Fibonacci strategy, guys. So after the break, let's go! Welcome back. I know you guys love my previous video on how to apply the Fibonacci, but on this video, we're gonna basically showing you a strategy on how you can add your Fibonacci with multiple confluence, guys. So let's just get started. So enough talking, guys. So as you guys can see, and as you guys can know that once we use the Fibonacci, we must be in a trending market, in the overall bullish or bearish market momentum before we can apply the Fibonacci, guys. So you can scale into your smaller time frames. You can apply your Fibonacci on your 5-minute, 15-minute, and your 30-minute time frame. But I most likely love to use my Fibonacci on my 30-minute, my 50-minute, and my hourly time frame. That is where I most likely love to use my Fibonacci retracement tool, guys. Most of you guys will use it on the smaller time frames, like your example, like a 5-minute, but I love to use it as in confluence with my bigger time frames, like my 4-hour time frames, with my daily time frames. Once I solve rejection and I see that my hourly time frame starting to form a trendy market, right? So guys, let's just start. So as you guys can see, I already put in my descending trend line, guys. So that is one confluence that we can apply on the strategy, guys, is to find excuse me, guys, to find a bullish momentum or bearish momentum trend before we start, guys. You cannot just use a Fibonacci like from this area to this high and expect. No, guys, it will not work that way. You must wait for price to form and show you clean structure in market direction before you can apply this strategy, right? So as you guys can remember, I run my Fibonacci from this swing low, from where the market was building the momentum from this candle, from this bullish, beautiful bullish candle, and to this high, right? You see this? To this high. Price come for a low. You see there? Respect my zone. Beautiful. Respect my zone there. Beautiful, guys. Respect my zone. Do we have a support? Let's look for. Hell yeah, we got a support right there. So you guys can see that we break out of this level, of this 4-hour level of support. That's resistance. Sorry, guys, it's becoming a support. And after this candle confirmation on a 1-hour time frame, we will enter position, guys. So this is basically an example on our bigger time frames. Like this is an example that I'm showing you guys on my 1-hour time frame, guys. You guys can apply it on your smaller time frames as well, but I prefer most likely use bigger time frames for multiple confluence, guys. So I will keep my stop loss right there. I will target, always look left, guys. That is how we can determine the move and where the price most likely will go, guys. So as you guys can see, we are facing this level right there. So you guys can see we have this high right there. Bam. So this is where I'll target this high once we broke out of this level of resistance, guys. So this is my first trade. I'm gonna target this area right there. It's a beautiful ratio. So now I can see price create a new high. So this is basically what we call the dragging back. So you drag it to where that the candle confirmation was creating that beautiful bullish engulfing candle. So now you just drag it over to your new high, right? From this low to this new high. As you guys can see, we break out of this resistance and price come for a beautiful retracement in our 61850 golden zone with this beautiful candle confirmation, right? You guys can see. So now we can add another position. Can add another position right there. So now we're basically compounding it, right? We keep a tight stop loss at least under there, under our previous week. And guys, I'm gonna talk about the difference between stop losses, guys. So there's a difference between a technical stop and a fixed stop. I'm gonna show you guys in the next videos on how to use the correct stop, guys. So now I'm using basically a fixed a technical stop because it was under the previous candle low. You understand? This is basically a technical stop. Basically what a fixed stop is basically a 25-point stop for me when I'm trading forex, guys. And it depends, and there's a difference between one two trading indexes. So I will use a smaller stop loss on my indexes. So I will have a fixed stop of 20. That is my max fixed stop that I will use on indexes, 20, and I will have a ratio of 3 to 1. So I'm always gonna get like 60 points on this. So now I will target the same area, guys. So basically with this beautiful, okay, I'm gonna use a technical stop, a beautiful technical stop. As you guys can see, I target this area and I have this position open here as well. So once I saw price create this candle, I can move my stop to break even. Now guys, I have a risk-free trade. I only risking this 22 points on the table, guys. And on this trade, you could have taken some partial positions. It depends of your lot size, what was trading. So now you can take partial of your positions once you see your trade is basically progressing in that way. So now you guys can see price give us this beautiful candle confirmation on this beautiful Fibonacci, and price continuing to the upside. So now we will look for to do another dragon back, guys. Let's see. I want to show you guys when you will see that the Fibonacci is not valid anymore. So now you guys can see price create this new high, and price come for the retracement and form a level of support. But what you guys can see is price trading close under. So that is a good sign for you guys. You guys notice that this is a strong 4-hour level of resistance that price was approaching, guys. So most likely what price will do, once price respecting a strong 4-hour level, price will most likely change direction, right? Price will most likely change direction, guys. So that is why we can see that our Fibonacci didn't work on this one, because why price was rejecting from a strong 4-hour level, guys. So you guys can see price did come into our 61850 golden zone and respect our hourly level of support, but price close under with this candle, and you guys can see price come for a breakout and retest in this beautiful candle confirmation that's basically showing us shells, right? So now we can see from this high to this low, price is basically creating a new low. So now we must be really careful, guys, because why, that's basically a sign for us that market condition is basically changing to sales right now. So now you guys must be really careful on your decision making before you guys can take any trade, because why, as you guys can see, price was rejected from a strong 4-hour level of resistance and price creating a new low. So now we know that, okay, market condition may most likely change to the downside. So let's scale. Okay, now we can see if we run a Fibonacci from this high and to this low, right? This low. Now we can see it more cleaner, right? You see that price respect this 4-hour level, price create this low, and price create this high, right? Price respect our 5618 golden zone on a strong level, so we can easily take a position right there after this beautiful candle confirmation there, guys. So let's just have a beautiful stop, and we target always our previous lows, right? So we will target this low, we can target this low there as well. So now let's see if we have a second position. Okay, yeah, we can see price creating a new low. So let's drag and back from this move, from this candle, from where the move start, guys. So let me just move this thing out of my way for now to this area. So now you guys can see the price break to the downside, create a new low, come for a beautiful retracement in our golden zone, 61850%. So as you guys can see, prices basically rallying to the downside. With this candle confirmation, your guys could have taken easily another position right there, right? Keep your stop loss just above this week, right? Now we have basically a fixed stop, and you target the previous lows, right? Same lows, this lows, you can target this lows. So now you just drag and back, waiting for price to come for another retracement, right? So this is how you do it, guys. There's another opportunity for us. So you guys can see, you can use a Fibonacci from this low where the market was starting from, break out and create a new low right there. So you guys can see this low. Market structure break all the way to the downside, create a new low, respect it, and come for retracement and respect this level of resistance and create this beautiful candle confirmation, and prices melt, guys, to the downside. Bam, and you target always the previous lows, right? We can say you can target this area zone. Do we have more lows? Yeah, we can target this area here as well. Sorry for that. And you can target this areas here as well, guys. So See, there's a first target was hit. So now we can see, okay, price basically starting to move to the side. So one thing that you guys must remember is how market condition works, right? Price will most likely continue to the upside, move to the side, then come to the downside, and it's basically vice versa. Price will move to the downside, move to the side, and continue to the upside. This is basically how it works. So as you guys can see now, market structure change, the condition of the market structure change, guys. So here you can use your Fibonacci again from this low to this high, right? So now we can see that the first stage is over, guys. The first chase is stage is over. We see price come to the downside, price move to the side and continue to the upside, create a new high, price come for a retracement, beautiful in our 50 golden zone. There's a candle confirmation. We could have entered right there and target this highs, right? So now we can do a dragon back, a small dragon back from this low right there, right to this high, right? So now we can see price creating this new high. Price respects our 38 838 continuation level. As we see, beautiful candle confirmation and prices run to the upside. This is basically what I can see. So now we can do another dragon back. We can use them from this low to this high, right? And we can see that price basically breaks out of this level of resistance that is basically becoming a support. As you guys can see, breakout, retest, respect this level. Golden zone got respected, beautiful candle confirmation, and price continue to the upside, guys. So that is it for this strategy, guys. So what I would recommend for you guys is to watch this video over and over and over again, guys, until you get it, guys. Because why? By repetition you will get this, you will get it, guys. Because why? This is basically how the market function all the time, guys. So this is basically the structures and setups you guys must wait for and look out for. It's a trader, guys. It's not it's not cool to trade every day, right? You understand? There's traders who will call a trade every single day, but that is not a key in trading. The key in trading is to wait for the best setup to play. And once your best setup play, you can milk it setup, guys. You can milk it setup. So that is basically what I'm trying to teach you guys. We're not gonna trade disgusting market structure, guys. We're always gonna wait for price to showing us clean structure to the upside, clean structure to the downside. Wait for price to finish off with this consolidation. We see price create a new high. Wait for price to come for retracement. Beautiful candle confirmation, continuation. This is basically what we're gonna wait for, guys. So please, guys, watch this video over and over and over again, guys. And if you guys don't know how to apply your Fibonacci, please watch my previous video, guys, on how I'm basically teaching you guys how you can draw the Fibonacci correctly, guys. By repetition of watching these videos over and over, your guys will become better. I can promise you guys, your guys will become better. So it's your boy King GK here at Newton Effects, and I'm out.